guys, it's Carter. Welcome back to the channel. Hope you guys are all having a great day today. Guys, we have a very special announcement. C3.ai, this artificial intelligence company, is down a whopping 11% today. And guys, in the past month, C3.ai is down over 29%. So we're gonna be breaking down what is going on with this company and answering this main question of should you buy this stock. So I hope you guys all enjoy it. If you have any questions, by all means, ask them down in the comments. Guys, hit that like button, subscribe, because it really helps me out when you guys do that. So let's dive into this one. Alright, so for those of you that don't know what C3.ai is, C3.ai is an open AI and it's an artificial intelligence company. And with that being said, artificial intelligence this year has been one of the fastest growing sectors. Now if we look at ChatGPT, which has been the fastest online site to hit 100 million users, and we've also seen a ton of growth from this stock. Now year to date, this thing is up a whopping 69%, which is quite a lot, but you have to look at that 1 month chart. The past 1 month, it's down 29%, meaning this thing's selling off. Now, the reason why it's down 11% today is because this thing got massively downgraded by Wall Street. Now, anytime you have something like this get downgraded, what happens is you have retail investors and you will have hedge funds and all types of investors start selling. Because if somebody tells you to sell and Wall Street tells you to sell, that puts fear and panic into the market, and this will cause people to just say, all right, I'm not even gonna worry about it. Maybe I'm gonna cut my losses and not have to worry about it. But with that being said, in the past month, it's also came under controversy that this company has been possibly falsifying income statements. Now, anytime you have that type of news as well, you're gonna have sell-off, and you bet it contributed to that 30% sell-off. Now, everybody loves to say that the growth of AI is very large, and I definitely think it is, but there is some things you must know. Now, C3.ai is a growth stock. This thing is gonna go up and down at very rapid rates. Now, this stock was once trading for over $180. Look at the 5-year chart. This thing has massively sold off from then. So with that being said, I think there is a ton of growth, but you always have to look at it as, all right, if I invest into this, one, keep this thing under 1 or 2% of your portfolio. What that means is for every $100 you have invested into other stocks, other assets, bonds, whatever you may, whatever you invest in, keep it under, $1 or $2 invested for every 100. The reason why is because if this thing sells off back down to 0, which it's already has that downward trend, now you're only out 1 or 2%. Now if this thing squeezes up, one, you always can buy more, right? That's the biggest misconception people have, is they think once the stock goes up a little bit that it's over. Now, I think that is the best strategy because it's a great way to reduce your risk. Also, another thing you guys can do if you want this is to invest weekly, dollar cost average, right? Dollar cost averaging is a great way to reduce your risk and reduce your volatility, because as the stock sells off, all you're doing is you're just averaging down that price. So once the stock recovers, you make a lot more money. But to answer that question of, am I investing in a C3? Yes. I do have a couple of shares, and it's well under 1% because I think that we're gonna still face a ton of issues with just the general state of the economy. I think right now we're facing just a lot of conflict. Anytime there's conflict, we see volatility. So I'm just kind of investing a little bit, well under probably 0.5%, and then I'm just sitting back. In some cases, I think it's better to just sit on the sidelines and just watch what happens, especially from a company like this. Also, there is some ETFs that pretty much just track all the best AI companies. I would highly recommend looking at those. You guys will see one right here. But I just think the growth for me is definitely just very risky. And if you're a beginner, I think it would be better suited to invest in an ETF first and then start picking and choosing, individual companies. Also, looking at the fundamentals, it's not the greatest. We've seen a revenue that's down, net income. We've seen just a variety of different fundamentals that aren't the greatest. So I just think right now it's a high risk, high reward play. And I just think for me, I have a little shares, but I'm also just sitting on the sidelines and just watching what happens. So guys, that is it. I hope you guys enjoyed it. If you guys did, hit that like button and subscribe, and we'll see you guys later. Remember to stay happy, guys, stay positive, and stay safe. Take care, everyone.